Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on PCLN NVDA TSLA NFLX CMG. So PCLN, further downside, we did form a bullish reversal doji, but that's after taking out a couple key supports. We are holding 1800 psychological, so the bulls must see a green day on Monday and to break 1820 to be looking for confirmation of this doji, but anything under 1883 is going to be another lower high. So at the least, if the bulls are trying to reverse this trend, they're going to have to bounce, set another lower high compared to that level. Unless there's some kind of news catalyst, we're not going to make it up to that level on this bounce. Then pull back, form a higher low, and then a higher high. That's going to be required from the trend change, and I can be confident saying that because of the amount of downside that we saw here, and we would have to gain $70 where we currently stand to even make it to that resistance. So unlikely to do that in just a straight shot. The weekly time frame, losing the middle Bollinger Band, back testing and rejecting from it, and the key level is 1781 to maintain the weekly uptrend. Bearish MACD cross, bearish TCG cross for the first time in 2017. Seeing all kinds of first time in 2017 signals here on PCLN weekly chart. Definitely need to be cautious. The bearish momentum from earnings is carrying over and being combined with bearish market action for a significant drop since we had initially tried to establish a base after that gap down. NVDA, bullish reversal candlestick trying to form. The bulls are looking to hold the higher low of 159.64 into next week after a few days of consolidation. So this is our higher low. We now have an equilibrium pattern where we have the all-time high, load the pullback, lower high at 169.67, higher low at 159.64, and we will watch to see how we break from this tightening range sometime, likely next week. Weekly time frame, upper wick of profit taking. Look how many rejections from 170, 5 weeks in a row, getting a little toppy, but the uptrend is intact unless we break 138.58. Lots of wiggle room there. The middle Bollinger Band is going to come first. Potential bearish MACD cross and closing in on a potential bearish TCG cross, but we would have to see a move down into the 140s to see those follow through significantly in the next week or so. Tesla following through after the bear break, increasing bear volume as well. So the clear bear break occurred at 353.62. We have now dropped down to 345.80, and 343 is the key level before we start filling the gap. So that is a bear break, and we're now looking down. If that level breaks, nice significant downside further. Bearish reversal doji last week being confirmed. Equilibrium pattern on the weekly time frame with the goal of the middle Bollinger Band support test, which next week will be in the mid 330s. So there is still some space to the downside before that middle Bollinger Band support gets tested. Netflix on the daily time frame. Upper wick of profit taking, rejecting from exponential resistance. What started the day as a bullish day for Netflix, it was our lead tech bull the majority of the morning, faded into the end of the day with weakness. So I am keeping an eye on Netflix for the bulls to show up because of the weekly chart, which we'll look at in just a moment. But the gap has not filled just yet at 163.55. 50-day moving average support is trying to hold at 165.65. But if exponential resistance keeps driving the price down, that gap will likely fill in the near-term future. Netflix on the weekly time frame. So a month of consolidation, not even giving back that bullish reaction to earnings week. And I do anticipate a higher low to form. The middle Bollinger Band is going to be in the mid 160s approaching, and looking for the bulls to stay in control of the overall trend because we've seen such significant consolidation. So when we do see the SPY and the tech sector bounce, which may be, who knows when that's going to happen. It could be Monday. It could be a week from Monday. But we will be looking for Netflix to be one of the lead tech names that is bouncing due to its position on the weekly time frame. CMG continues to dump, lowest price we've seen now, the lowest close 3 days in a row in the last 4 years, and close at the low of the day, indicating momentum and weakness. 300 psychological support comes next from here, and there's absolutely no sign of the bulls anywhere to be found. Exponential resistance is running the show, and the weekly time frame, the RSI is getting into the low 20s, which we did bounce from back in the E. coli scare. So have to be paying attention for that quick bounce to potentially develop, but there is no sign of it developing anytime soon where we stand right now. So I hope you have a good rest of your weekend. We'll check back in on Monday. More bearish action than we've seen in quite some time on SPY, and watching to see if that's going to follow through or if the bulls will buy the dip like they have all year.